Yeah, that's what we're going to do. Hey, everybody. Welcome. Happy Sunday. I'm Rob Booker, best-selling author of Adventures of a Currency Trader and Trading by Faith. Welcome to the broadcast. Super happy to see you here. It's a Sunday morning here in Houston, Texas, and I am excited to spend some time with you. We're going to talk about some mistakes. We're going to talk about some successes. We're going to talk about what to do when a trade goes wrong. And I know that those of you that trade the robot together with me experienced about a week and a half of unsettling movement with the Canadian dollar, and now a little bit probably with the Australian dollar even. So what I'd like to do is share with you some strategies that I use when a trade goes wrong, look at my actual live account, show you the trades that went wrong, and open myself up to criticism, open myself up to embarrassment, so to speak, although I'm not really embarrassed, but so that you can learn from anything that you might think is a mistake, or you can learn from my experience. That's what I'm here for. I mean, a lot of people in this business, you wonder what they're doing here on camera or whatever else. And as many of you know that have followed me for a long time, I love you. And I love traders. I don't necessarily even love trading all the time, but I do love traders all the time. And so today I want to look at some charts and I want to talk about some strategies for when a trade goes wrong. And if this has ever been helpful to you in any way or shape or form, what I'd love for you to do is click and subscribe to my YouTube channel. So if you're watching live on Facebook a little bit later on today, you'll be able to click a button and you'll be able to follow a link and subscribe. And if you're watching here on YouTube, just hit the subscribe button and click that bell so that you get notified when I go live. All right, with that said, what I'd like to do is show you my screen, show you my charts, and we'll try to zoom in here a little bit and whatever, but I want you to take a look at the open trades that are in my account right now. And there's a lot of them, so you can see a huge list of trades here. And it might be so many trades that they're really small on the screen. And that's because so many of these trades opened and they've just gone into an open loss. And the total loss is $708 on a $10,800 account. So that's not quite what I was looking for. It's not optimal, but it does happen from time to time. And in this video, I want to share with you some things that I have done already and some things that I plan to do, and explain why I hold on to some of these trades and why I don't hold on to some of these trades. And hopefully, as I said, you'll learn by the end of the video some strategies for what to do when a trade goes wrong, when to close down a trade that's gone wrong, maybe how to help a trade out that's gone wrong that maybe has a chance of success. And we'll cover all that inside this video. So let's start off here, and I'm going to bring the chart back into a view of the British pound Canadian dollar, because this is one of them that went wrong. And I just have to find it here on the screen and take a look at it here. Okay, here's one of them that went wrong. And let's see, the best way for me to draw on the screen is to expand this a little bit here and then grab my screen snipping tool and grab this image right here and talk a little bit about it. So price was falling, the British pound was falling, and my robot took a trade here and a trade here. It bought as it was falling. Now we could for a moment maybe not have a conversation about whether your trend trading system is the greatest trend trading system in the world and you never would have done this and your system is, just for a minute, just remember that, you know, I'm trading a system here that I've been trading for a lot of years, and it sometimes does something like this, and of course I don't like it, but I let it happen. And here's what I did with this British pound Canadian dollar trade. When we had dropped down to these levels down here, what happened is the relative strength index went oversold on 5 time frames simultaneously. And you could see that with these green lines printed on the screen right here. And the last one was right there. And I bought again when that happened. And because I bought again when that happened, this entire trade came screaming back upward. And what was a loss became a break even. And it could have become something much more substantial than that. And we could talk a little bit later about what kind of opportunity that was and whether or not I should have taken better advantage of that and maybe made more money from that buy trade. But I just want to start things off by saying that one of the most important things that I can do when I'm in a bad trade is not panic. And we'll talk about some strategies and we'll talk about some reasons why that made sense. And you might be shaking your head and saying, wow, you added to a losing trade. That was the dumbest thing that you could ever do. We'll talk a little bit more about that as well. So I'm not going to discount any of those criticisms. I just want to move on and show an example of another one of these that hasn't fired off all the way yet, but has produced the same kind of situation. This is the Australian dollar, Canadian dollar. It's one of the greatest currency pairs in the world because it just keeps moving back and forth. My robot bought here, then bought again on down here, and then, and I'm going to try to make this pen a little bit, well, that is the thickest it can go. All right, well, fine. What I want to do is buy again down here because we printed bullish divergence and we've been overbought on 5 time frames simultaneously. And you might wonder, what does it mean for a currency pair to be oversold on 5 time frames simultaneously? So I switched back to the charts. I know they weren't being shown for a moment there. I apologize for that. Okay, this is the Australian dollar, Canadian dollar. And what I'm going to do is go back from the beginning on everything I just said. And I know that you probably want to see it. All right, here it is. So my robot bought here again, and then down here at the bottom we printed bullish divergence, and the currency pair went oversold on 5 time frames simultaneously. And we're still down here in the dumps. And what I want to do is when the market opens again at the beginning of the week, I want to buy again. And I want to give this a chance to go into profit. I want to lower my average price and get in on something. I'm down 84 pips or $26 on a $10,000 account. That's not a big deal. Right now, I wouldn't be concerned at all about this loss. In fact, I would be setting up a buy trade and I wouldn't worry so much about it. All right, so those are 2 different examples of what's going on. Well, at the same time we've got that going on, we have the British pound Australian dollar. And I got to pull up and find that currency pair. It might take me a moment. And welcome if you're just joining us now. Super happy to spend some time with you. If this is your first time watching a video of mine on YouTube, I want to just say welcome here and happy to see you here. Here's the British pound Australian dollar. And this thing is just out of control. It's just absolutely out of control. You can see here that price has just rocketed upward. And I've got 2 buy trades down here. And they are losing $140 or more than 1% of the value of the account. And this trade is down 496 pips, and almost all of the movement against me took place in just a couple of days, and it just raced upward. And the British pound is super strong. And this is really disappointing, and it's really concerning, and I really hate it. And it's responsible for a significant amount of what's gone wrong in my trading account. The Australian dollar is super weak, the British pound got super strong, and it's really frustrating. So what I did was I switched over to the 1-hour chart, and I took a look at this, which I want to look at together. So I'll use this circle here and I'll mouse over this, and maybe I'll expand here a little bit so the candles are a little bit larger. So as we have been rising, we've been printing bearish Knoxville divergences. That's an indicator that I built. And the first and second times that those print are often, especially in a trend, irrelevant and I don't do anything about it. The third time that those levels print, we often have a really good indication that price is going to move in the opposite direction. And the relative strength index is overbought on 5 time frames simultaneously. So I may get a chance here to sell this one more time and help my trade out of trouble. And you might be thinking, well, Rob, how in the world did it get this bad in the first place? Why in the world did it get this bad in the first place? How in the world would you have let this get so bad in the first place? And here's where I've got to say. I was traveling, I was in Florida for a conference, and I didn't see this happen. I didn't watch this trade happen. And I let the robot take it. And my account's in no danger of exploding or, right? I have no danger of margin calling my account here. There's none of that. That's not even a relevant question. However, this is a mistake. I should have closed this trade down earlier when it was down, 200 pips. And when it was down 200 pips, for those of you that trade the robot with me, I could have very easily closed down trade number 2 and left trade number 1 open and not really worried about it. All right, so a lot of this might not make a ton of sense. So what I want to do is walk over here to the whiteboard, and I'm going to bring my stuff over here so I can make sure that you can see it as we go. So I'm going to grab my screen broadcasting management tool. I'm going to switch the camera around for us. And we're going to look at the whiteboard a bit. All right, so welcome back. You can't see me extraordinarily well. Look at that. So we'll zoom out a bit. Yeah, that should help out a bunch. There we go. Excellent. That ought to help out a bit. You still can't see my head, so we'll just zoom out all the way. It's pretty funny. Didn't realize you wouldn't be able to see my head. All right, welcome back, everybody. So what I want to do is talk a little bit about robot trades and managing robot trades and closing out robot trades and a strategy as a whole. So let's talk about the strategy. First of all, let me just mention the strategy. The first element of all of this is that I trade a strategy that has a high win percentage. So most of the time, my trades that have gone wrong are very quickly going to come right back and become profitable. But occasionally, there's a losing trade or something that goes wrong. And in this instance, I have to have, in these situations, I have to have a max distance or a max loss that I'm willing to let a trade go before I just shut it down. And then I let the robot go back to taking high probability trades. And in this case, what I will do oftentimes is I will split my, well, the robot does this automatically, but I will split my trades into 2. So I'll take a first position size that's very small, like 1 micro lot. And then I'll take a second position size that's a little bit larger, like 3 micro lots. And when it's moved the max distance against me, I can close the 3 micro lot trade and leave this first one open. That way I take a loss. I'll close a losing trade, maybe at 200 to 300 pips, and maybe at a 1% loss. So I'm going to go ahead and stop out of a trade. That's perfectly fine. Stopping out of a trade is no problem. And you might say, well, 200 to 300 pips is too big. That's too big of a stop. Well, for you, it might be too big, and that's fine. I'm not here to tell you what a stop size should be for you, but about 1% is about right for me. And you might also say, this is ridiculous that you're even adding to a losing position. You're a total dummy. Well, I'm not a total dummy. I've been doing this for a long time, but I respect your right to trade any way that you want to trade. What I do is I trade a high probability system, and I give it the largest chance to succeed. I give it 2 trades, and I give it a really good chance to succeed. My first trades are right 70% of the time, and my second trades are right 85 to 90% of the time. So I have a super high win percentage, and traditionally what you'll see is my equity curve and my balance will go up and up and up and up. And then what will happen is I'll go through a period of drawdown over a week or a week and a half, and I'll have some trades that cause some difficulty, and then those trades will close out and I'll go back to earning money. This is no different than the trajectory and the pattern and the equity chart of anybody who has a successful trading system. It's absolutely the same whether someone's stopping out of trades and they have a series of losses in a row, or if they're holding on to a very small losing trade for a temporary period of time and things have gone wrong. Now, with all of that said, I want to reaffirm something that has become increasingly important for me to emphasize and make sure that I communicate. And that is, you cannot accept and you cannot allow for a small loss to become an extraordinary, gigantic, and significant giant losing trade. You can't do that. You have to have cutoff points. Some people call these stops, and I think that's a really limiting way to discuss this. Calling them stop losses pigeonholes us into this idea that we have to put a stop level on all of our trades, and that's not really necessarily what we have to do. We have to we can let one trade go a little bit further than another. We can do our own analysis. We can size up the charts, but we do have to manage and take care of and close out losing trades. You cannot let a losing trade go on forever and torch your entire account. And what makes this a problem isn't really, it's not the size of the loss in terms of pips or in dollars for those of you that trade shares or whatever. It's not the distance that something traveled. Some people say, oh, well, you can't let something travel a long distance away from your entry price. Well, especially in the currency market, we just saw that British pound Canadian dollar trade, which dropped really far down and then suddenly just went right back up and covered 75% of the distance that it had fallen. That's no big deal at all. That's not really that big of a deal. It's not about distance. And a lot of people will talk about dollars or talk about pips, but what they're really talking about is that's a long distance away. And that isn't what I don't think that's the problem, because in almost every market, unless you're trading like the FANG stocks or like the Japanese yen or something like that, things that travel a long distance away come back, and there are reversions to the mean, and that's just math. So it's not really the distance that something travels against you. And a lot of people will say that's what matters most. And they'll just look at how far something is, and that will be the most important thing. But it's not the most important thing. The most important thing, I think, in trading, the fastest way to become a lot better at trading is to reduce your trade size. And if the trade size is small, then if I travel for a couple of days and don't manage the account actively over that couple of days, if my trade size is small enough, it doesn't really matter. It doesn't make a huge difference. You can't glue your face to the computer screen and sit there in front of it all the time. You can't, even if you are the smartest trader in the world with the highest probability trading system in the world, and Dionne Warwick is on speed dial on your phone, you're still going to run into problems. You're still going to have issues sometimes. There's still going to be times when things don't go well and they don't go the way that you might have hoped. The best thing that you can do, and the easiest way to save yourself as a trader from difficulty, isn't about putting stop losses in. That's maybe second most important thing. The first most important thing is to reduce your trade size so that every single trade you take isn't going to make or break you. It's not going to turn you into a millionaire overnight, and it's not going to margin call your account overnight. That's why on for every $10,000 in my account, I'm going to start my trading with 1 micro lot, even though that's a 1,000-unit position. I'm basically not using leverage. I'm basically not doing any, I'm not going to cause myself any problems. And I am regularly closing out trades that go wrong. We've talked about this before, but I trade my robot in a style that allows for me to close the first trade, the second trade, or all the trades in my account on a regular basis and just take a loss and keep closing trades and let this robot and this system do this. Move through a period of success, go through a period of difficulty, and this is, maybe closing down some trades, and then resuming with a period of success. And so the question naturally becomes, and this is where we're gonna wrap things up. The question naturally becomes, what is the maximum loss? Let's say you trade with a small trade size. Let's say you are monitoring it daily for a few minutes. What's the max loss that might be acceptable? And I think on a given trade, it's supposed to be a 1%. On a given trade, if I've lost 1 to 2%, like for example on that British pound Australian dollar, which is the world's just most aggravating currency pair, if I've reached a 1 to 2% loss, I need to start closing down trades at that level. You can call that a stop loss, or you can call that just sort of, it's 1.1%, but I feel like we're at a turnaround point because the relative strength index is overbought on 5 time frames and we have bearish divergence, so I'm not going to touch it yet. Or we might be at 1.7% and I might not touch it. Or we might be at 0.5% and the thing is just racing off to the moon and I'm just like, forget it. I might close it off. I'm going to use some discretion. And so this is the range. This is the range. And so when trading opens up on Monday on that British pound Australian dollar position that isn't looking right and isn't looking good, I'm going to close down part of that trade. I'm going to go ahead and close down part of that trade, and then I'm going to set up a brand new trade to help the rest of it out. I'm going to reduce the size of my loss. I'm going to scale back on what isn't working. I'm going to admit that something isn't working. I'm going to close down half of that entire trade. I'm not going to completely give up on it. I don't have to. I mean, at this point, the likelihood of this turning around is higher than it's been the entire time the position's been open. But that doesn't justify me taking a big loss. And I have to trim down what isn't working, and then I can make it back up later. So here's how you deal with the disappointment of something having gone wrong. So this British pound Australian dollar has been traveling upward. And because it's been traveling upward, I've taken or had to sustain or dealt with loss and disappointment and difficulty. So at some point at the top, let's say I take $50 of the loss off the table. So I've now lost 50. Let's just say it's $50, whatever it is. What I'm going to do at some point in time as it travels upward, and then maybe it breaks through a trend line, I'm going to add again after things have finally started to move in the direction that I originally thought they would. And I'm not going to be, at that point, I'm not going to be mad, I'm not going to be disappointed, I'm not going to be overly emotional, I'm not going to be panic-stricken, I'm not going to be curled up into the fetal position, I'm not going to change my entire strategy just because something went wrong. In fact, I'm going to get excited because I want my money back. Breaks through a level, I add, and what was a temporary setback might turn into the biggest win that I've had for a while. Because like that British pound Canadian dollar trade that you saw, things look horrible. Things look terrible. Things bottom out eventually, though. And the sun comes out again and shines back on your positions. But most people down here, in the depths of despair, they've traded too big. Their trade size was too large, and they've taken a gigantic loss. And they haven't been willing to close out part of the positions on the way down, so they're even in worse positions. And then they have nothing left to give or to do when price starts to come back up. They have no margin left, no emotional or psychological courage left, and they can't do anything about it at that point. So price moves up a bit, and they don't take advantage of any of it. And in those situations, that's when I have felt the worst about myself as a trader. When I didn't manage it as it fell and scaled back out of it, and then completely missed the move back in the original direction that I thought it would go, because I didn't take advantage of that. And then I'm left feeling like in those moments, like I don't know how to trade. You might think that everything would be solved if maybe we were simply just a trend trader, and all we did was just ride really big trends for really long periods of time. And trend traders say, well, I'm going to take $1 of loss, and I'm going to have my winners be 10 times bigger than my losers. This is another way to do the same thing that I've just talked about, and it's completely reasonable, and it's totally valid, and it's the same thing. A trend trader might have 20 losses in a row, or even more than that. For professional trend traders, that's not even remotely unheard of. And then they might have 3 winners in a row, or one really, really, really big winner that makes up for all of that and much more. But trend traders all the time, as price is ranging and not trending, they're taking a loss, 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 a loss. And trend traders tell me all the time, I'm so frustrated, I'm so annoyed by this, I've had this really giant losing streak and I want to change my trading system. And my answer often is, hey, if this in the long term statistically does work, you can't let temporary setbacks upset you to the point where you change your entire trading system. And you can't let any of these types of things turn you into some kind of religious fanatic for your trading system, where you act like you've got the best system in the world and everybody else is a dummy. You can't do that either. Thanks for being here, everybody. Happy Sunday to you. Happy beginning of the week. Happy October. For those of you that are members of my robot certification course or my robots course, I love you all. I know that you've been stressed out over some of these positions, and I appreciate having the chance to talk to you about this. We'll do some webinars this week. We'll talk about those positions for the members. If you don't already have the robots, I'll put a link on this video a little bit later, and you can jump on inside of the robots class and give it a shot and trade together with me. I love you all. Have the greatest day ever, and I'll talk to you soon. Bye for now.